9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching The China Show. I'm Yvonne with David Ingles.
Good morning. We're counting down to the open of markets in Greater China. Let's get to your top stories today. Asian stocks gaining while oil dropping as President Trump insists a deal with Iran is close. That's after calling off planned strikes. South Korea's Kospi index, as you can see, leading gains as chip shares continue to rally.
SpaceX set to make its trading debut after its biggest IPO in history, launching it into the ranks of the largest public companies and boosting Elon Musk's fortune to nearly $1 trillion.
And we look at the regulatory environment for China's e-commerce players after authorities scold Alibaba and JD.com and others for allegedly misleading promotions.
Oh, there's a lot going on today, Dave. Not just when it comes to the World Cup kicking off, right? You talk about SpaceX, that's just a few hours away. And then when you talk about this rally in the back of these Iran headlines, we're hearing pretty strong rhetoric from President Trump that maybe there is some sort of deal in place. The market certainly is moving with those headlines. And then you pair that with some of the deals that we're seeing, or possible deals maybe in the grocery sector here in China with Alibaba, Meituan, that competition continue to heat up here.
Yeah, and a couple of stocks that we're tracking there, right? So going into this, even before this breaking news that we had in our reporting that Alibaba is looking to pay about $1.5 billion to get into improper, of course, the grocery war with Meituan, certainly something to watch. The regulatory environment is something that's come up again, I think, when you look at some of the names that have been put through. Baba was down 2 nights ago in the U.S., was down yesterday in Hong Kong. It's down further overnight.
Yes.
And that puts us now closer to, just broadly speaking, a bear market, right? When you look at the broader MSCI benchmark, and it's really one of the reasons why everything else but Chinese markets have done exceptionally well going into the weekend, and I think that is similar to what we're seeing. Perhaps the pricing going into today, we'll get you a more nuanced take really on markets as we go into the thick of Friday. But yes, apart from that, there's also this BOK line that's coming through.
Yeah, so we're hearing from the governor in this statement this morning. So talking a little bit more about the exchange rate, says expects the dollar-yuan rate to stabilize gradually. And Chen says the interest rates need to be raised before too late. And he flagged in particular inflationary pressures to rise if this weaker yuan persists. So continuing to talk a little bit more about that. They seem a little bit more open to these rate hikes now, Dave, after what we've seen, even in the ECB overnight, the first G10 sort of economy to raise rates here.
Which was well flagged, not so much this one on the BOK, but to your point, right, overnight that we had the ECB. And the one we're talking about right now on the BOK is the speech. It's a 76th anniversary of the BOK. And, of course, within that speech is, of course, this hawkish tone that's come through. And it's better to raise rates earlier than it is later, not to be behind the curve. You look at what's happening with the Kospi index, not much reaction there. We were up as much as 8+% at one point, not to say 7.5% is not bad, not good at all. Japan is also leading some of these gains today, something else we're tracking. And apart from that, the clouds have parted here for risk assets to really rocket through on the back of, again, back to the earlier point, the countdown we're doing into SpaceX, of course, the biggest listing on Friday here.
Yeah, you wonder now that, maybe there's a little bit more positive headlines coming through from Iran, that we could see a smoother sort of listing debut for Elon Musk. That certainly is what he's hoping for here today. But let's get to, of course, all those top stories that we've been tracking today. And bring in our team. Our managing editor, Jill Desis, also our markets reporter, Anthony Stevens, joins us on our Hong Kong set, and our Bloomberg Deals editor, Michael Hytha, joining us from San Francisco ahead of SpaceX. Jill, I'll start with you. We've heard this before, but what do we know so far, whether we have a deal or not?
Yes, we have heard this before. So what we've heard from Donald Trump, Donald Trump says the war is over. So, you've got to, first of all, take that in stride. Obviously, there's been quite a lot of rhetoric that's been happening over the last 24 hours or so. Remember, we started Thursday in the United States with Donald Trump threatening to attack Karg Island, critical energy supplies for Iran. Talking about the potential for a major escalation in this war. He pretty much immediately kind of backed off that a little bit and expressed some reservations negotiations. And now we're at a stage where he says that there's a deal in the works. Nothing's been signed at this point. But Trump is certainly indicating that there could be something signed in Europe as soon as this weekend, implying that J.D. Vance, as vice president, might go. I do have to caution, though, that obviously we haven't seen anything on paper. It doesn't appear that anything has been signed on paper. Iran has said essentially just that there's nothing that's been agreed to that's been signed. And I do want to quote the president himself here, describing this pact as, quote, a very strong memorandum of understanding that is a little conceptual. So you're hearing from the president of the United States himself that kind of oscillation in terms of how he describes this. I think, at this point, a lot of people have fatigue over the state of these negotiations. They've been very complex, very drawn out. We've heard repeatedly from the president over the past couple of weeks, several weeks at this point, that they were close to something. Does that happen this weekend? I think we still have no idea for sure.
I mean, this is the strongest language yet from the U.S. president, but Anthony, I'll bring you in. As far as markets go, the war was over 8 weeks ago.
Right, and what people want is the direction of travel towards a peace deal to remain consistent, right? And what we saw yesterday was a cross-asset conviction that is the case. We've had a 1 sigma rally pretty much on every asset and a 1 sigma drop in oil. So that cross-asset reaction function was very strong. And you're seeing a carry over today. We see the Korean won strong. It's not that the Korean equities are strong. Korean equities have been strong for a very long time. And they were just looking for another excuse to go higher. But the Korean won rallying alongside is an interesting reaction function. Also, Korean construction names are very strong. These are names that are exposed to the Gulf in a very big way. And people are really speculating that this war is over. Those names are up 15 to 20% today. That is a materially different dynamic from just a pure tech rally. Now, we also have the liquidity dynamic of SpaceX. To be clear, if SpaceX was 4 times subscribed, that means 3 times the SpaceX is coming back to markets, back to risk-loving investors who are presumably the type of people that invested in SpaceX in the first place. Those people are going to chase the tech rally again. And we saw some signs of that when we were sitting together yesterday, when people started to buy Hynix at the lows, right? When Korea opened down. Those people are being richly rewarded today as Hynix opens up 10%.
Let's bring in Michael Hytha. As Anthony mentioned, right, it's the big elephant in the room. It's the next thing to watch is the SpaceX listing debut, Michael. We got the pricing a couple hours ago. I mean, it seems like it's well expected what we got in terms of that. Can it live up to its hype today?
Oh, that, of course, is the really big question. I think it's set up for trading pretty well tomorrow. As noted, one thing, the effect of the announcement by Donald Trump today is that the NASDAQ composite had its best day in June, was up 2.5%. If that continues into tomorrow, that sets up, a positive environment for trading. No one wants to go public on their first day of trading with a sell-off happening. So that would benefit the shares. I think also, I wouldn't underestimate demand for the stock. It was 4 times oversubscribed, and there's still a lot of people out there. There are a lot of people out there, and a lot of institutions even, who did not get to buy the shares they had put in orders for. Also, there are people who were simply excluded from the offering altogether, investors in China and Hong Kong being the best example. So if they come in and start buying up shares, and through different means as well, through ETFs and various funds and such, that could make for a good first day trading debut for SpaceX.
Yeah, I mean, it becomes so they open the gallery to the general public tomorrow, Anthony. Talk us through retail appetite. You mentioned 3/4 of that subscription might be coming back. Some of that might be waiting. Some people are going to jump in, of course, at the open. What's the sense on the retail front?
So there was a fascinating amount of backtesting done on US IPOs, right? And the fascinating part is the worse the valuation picture, typically the better the performance on day one, right? Because you have this speculative boom in the last few years where people want to chase these dream-like companies. And this is the biggest dream that has ever been sold in US capital markets, right? So that is the tag here. And people do believe the story on the retail front. You're seeing a lot of positive social media sentiment. And you have to bear in mind that retail has done very well this year. So if you're up 200% on Micron, you're up 300% in Taiwan, you're up 200% on Samsung or Hynix, why not? right? Why, and you made 40% on your Samsung and Hynix levered ETFs. Why not have a flyer at SpaceX this morning on the open? So I think it's going to be a very volatile first day trading, to state the obvious, but I think retail is in the driving seat at the beginning because not that many fundamental players are long in the first place. It's a light float. Right? To return back to our day's trading, though, it's more that it draws a line under the risk sentiment around this IPO. Retail can't afford to take a bath in this IPO, but it does not look like that's the case at the moment.
Fantastic, team. Thank you so much. Michael Hytha there, Deals editor, Jill Deese is here, of course, on the latest on Iran, and Anthony there on the markets components as we go into the Friday session here. Just one last note here in the SpaceX listing. We are getting the SEC Form 3 here coming through, and information here that Elon Musk, now we understand that he is holding options here to buy, this is Class B shares of SpaceX, $350 million as far as that filing is concerned. Right, lots more heads, including, of course, more on the world's biggest IPO, and we're going to hear from someone who got in quite early here. Early investor in SpaceX and why he thinks the company is uniquely positioned for growth. That conversation with Winston Fu is coming up in a couple of minutes, going into the opening bell today, 19 minutes away to be more specific and exact. Shanghai, Shenzhen, and here in Hong Kong. Happy Friday from us here in the China Show. This is Bloomberg.
SpaceX is the biggest rising star of all time.
Anyone that's owning SpaceX, you're buying it for the Musk factor. And many that bet against Tesla and Musk going back a decade ago, that was proven historically wrong.
Elon Musk has appointed himself CEO for life. He has all the voting control. He has basically built a moat with alligators around himself, and that's not good for shareholders.
Feels like a milestone moment. This was an investment thesis that was unthinkable a decade ago for most investors. And I think now people are coming to grips with the fact that space technology is really here. What would have been science fiction to us maybe 10 years ago is now science fact.
There we go. I think there's one story in town today. SpaceX debuts in the U.S. later Friday, biggest one on record by a factor of more than 3. Let's bring in Winston Fu, who's an early investor in the company. He's founding partner and managing director at LDV Partners, a venture capital firm. Winston, good morning from the Asia Pacific. Well, the world's focus is certainly on SpaceX. Tell us a story. You guys got in early. In what way do you think, if any, has the story of this company changed? What are people going to be buying now? What is SpaceX now compared to a few years back?
I can't speak for what people are going to, how people are looking at it today. You've had lots of experts at Bloomberg itself talk about it. We, as early stage investors at LDV, we always look for great entrepreneurs and a strong moat for the business. And so this has been an incredible ride, and but we're as you said, we're early stage investors. LDV is named in honor of Leonardo da Vinci, and so we look to back modern day da Vinci's in the CEOs.
Yeah. How do you look at this modern day Da Vinci now? I mean, SpaceX before was all about rocket launches and providing satellite broadband there for internet. Now it's almost becoming this aspiring AI juggernaut. How do you view this company now?
Again, because of the quiet period, I would just point you to the prospectus. But in general, when technology companies can build platforms, and then those who earn the right build applications on top of those platforms, and I think that's
okay.
Those are
what do you make of
companies.
Winston? What do you make of some that are maybe not as ambitious, as hopeful as you, right? The likes of Jim Chanos, for example, saying that this is a hopes and dreams IPO. You look at the fundamentals, and this is a company that is not making money yet, or at least the revenue numbers are not really justifying this massive valuation. What's sort of the argument against that now?
I think the great thing about investing and company building is that there's, at the end of the day, there's a track record for everyone, and so we shall see with time.
Okay, so what are people buying here? Not just to rephrase my earlier question. Is this a space company? Is this an AI company? Is it somewhere in between that? In other words, what's the type of multiple people should be attaching to a company like this? While the concept forms of exactly what this company could become.
Yeah, again, I would point you towards the prospectus and what's on publicly available. I think there's it's a terrific time for the space tech and space tech market in general, and the market's growing incredibly fast, and there's a lot of applications to be built in space.
Winston, we got to leave it there. Thank you. Founding partner and managing director at LDV Partners there. We are just tracking some of this breaking news when it comes to Iran. So what we have heard in the last couple moments is that the U.S. has shot down 2 Iranian one-way attack drones tonight. That's according to Fox News. And also, according to Fox News, a U.S. official says traffic flow through the Strait of Hormuz continues. So it seems like, from what we're hearing, that we are seeing some progress, maybe possibly when it comes to energy flows. Of course, the caveat on what we've heard from the U.S. side is that we have not yet gotten a confirmation from the Iranian side on whether they are getting close to signing a deal this weekend.
Yeah, the direction, though, seems clear. Of course, we do need to wait for confirmation from all parties involved. But the fact of the matter, when you look at markets so far, the fact that we have an 8 handle on oil, the fact that SpaceX looks to be on track, the liquidity concerns are slightly easing going into the session today. And as you look at markets across the Asia Pacific, Korea is up 7%, the Nikkei is up 4%. Risk assets are a go this Friday. Lots more ahead. This is Bloomberg. Okay, let's all breathe a sigh of relief when you look at these markets going into the thick of Friday. So U.S. futures are up. We had a stellar session in cash markets yesterday. And Asia is actually doing quite well. I think when you look at the components across the Asian FX space, we're actually on a stronger footing across most, despite the fact that, of course, you have a stronger dollar index. A lot of that also has to do with the fact that when you look at G10, for example, you did get a move, of course, in the euro overnight, which is somewhat softening at the moment. Most important data point on your screens, 8 handle on oil on the back of Iran. Some of the stories there, despite the fact that you are getting some complications like this line we're getting through here, coming through out of Fox. That's just to say as well, the setup going into the Chinese markets could be also different too.
Yeah, I mean, as we talked about, we're still near that bear market watch when it comes to MSCI China. So we'll see if we get to that today. Yesterday, there was certainly a lot of selling when it came to some of these big China tech names. Regulators there gave a bit of a warning to some of the likes of Alibaba, some of these platform companies when it comes to really the competition and really misleading promotional practices. So we'll see if we get another day of this. The ADRs did drop overnight as well. We also have talked a little bit more about the technicals, right? We've seen some of the oversold conditions when it comes to some of these Hong Kong benchmarks here. But we're watching, of course, the precious metal space, online platforms, as we talked about. There is a CGB sale. We have PPI numbers coming out from Hong Kong, and we're waiting, of course, credit data from China.
Yep, could come out today. Most times it's come out late Friday. But yeah, so we'll keep an eye on that, of course, going into the weekend. Right, shares of Alibaba coming up on your screens very shortly. Hang Seng Tech is up over 1% in the pre-markets. We're looking at this, of course, given some of the latest news around regulation. And, of course, there's other news and reporting that we've done, of course, around Alibaba and getting into the foray as far as Meituan is concerned. Okay, let's put this all together. E-commerce players remain on watch. You have regulators summoning them over misleading promotions and a warning against unchecked competition. Let's check in on the story. Min Min Lo is here with us to take us through what these summons are all about. Min Min.
Yeah, it really shows you that the Chinese government is still continuing on this anti-involution campaign, despite inflation already returning to the economy, right? And the latest summons affect multiple sectors, from the e-commerce players to the train ticketing platforms to automakers as well. And I'm going to talk a little bit more about these e-commerce players because we had the CCTV state media report that provided very detailed breakdown of the things that they have violated. So particularly when it comes to this 618 shopping festival promotion, right? So they outlined a lot of specific examples. For example, PDD was accused of having unilateral clauses that exempted itself from any legal liability in terms of product disputes. And then when it comes to these 10 billion yuan subsidy campaign that many of these e-commerce platforms have been campaigning, Alibaba, for example, has been accused of misleading consumers because the campaign actually is not specific to 618. It's a longer term campaign, and some of these other e-commerce players were not able to provide evidence of just how much subsidies they actually are providing and the capital contribution ratio that is being shared between the e-commerce players and the merchants. So a lot of sort of different examples being raised. No fines this time, but perhaps this naming and shaming tactic is also enough, right? Just given the punishment of the stock overnight in the ADR. So that is maybe enough to actually get these e-commerce players to rectify their behaviors.
Yeah, you say rectify is interesting because we just had this line that broke about this sort of bidding war potentially between Alibaba and Meituan when it comes to Pupu. What do we know at this point?
So Alibaba has just put in a bid for this instant grocery retailer called Pupu. It specializes in 30-minute delivery, particularly in 4 provinces in the south of China. $1.5 billion. This is more than double the bid, the rival bid by Sun Art Retailing. And Sun Art used to be a subsidiary of Alibaba before they sold it off. So now it's backed by a private capital firm. But this is interesting because it comes just months after Meituan also acquired Ding Dong Mai Cai, which is another instant grocery retailer, just months ago for about $700 million. So again, Alibaba's bid is extremely aggressive. It shows you that they are really stepping up this fight with Meituan. And yes, maybe this wave of consolidation could eventually curb that price war in the longer run. But for now, it seems like that competition is heating up, and it's also creating a separate problem around anti-monopoly, right? Because the Ding Dong acquisition by Meituan right now is still awaiting approval from the antitrust regulator from China.
Min Min, thank you. Our China correspondent Min Min Lo there. Of course, we'll be tracking what goes on with some of these China tech plays here today. Pre-market is looking like this. We have much more from the regulatory environment here with Gavekal Dragonomics. And basically, they say this regulatory ceasefire is over. More on that coming up and the open.
Good morning. Happy Friday. Just under a minute to the opening bell, and most major benchmarks across the Chinese markets are called not just higher, substantially higher. Hang Seng Index up over 1, Chinex 3% to the upside, CSI 300 north of 1%. And we're looking at the likes, of course, of Alibaba, given all the news flow overnight. So it seems like this is going to be a good day. We'll see.
It's interesting, right? You have President Trump basically is calling for the end, or it says that this Iran war is over. We're still waiting for the Iran side of that statement here to see and really justify these moves that we're seeing across these markets. But yes, as you talked about, oil is lower. I think Goldman Sachs also just cut the 2027 Brent forecast to now talking about by $5 to like an 80-something handle when it comes to oil prices now. So, are the geopolitical clouds sort of parting now ahead of the SpaceX launch of its IPO later on today in the U.S., right? And does that pave the way for a smooth sort of listing debut? Obviously, it has been confirmed as the largest IPO in history here. We'll see, right? We talked about this retail frenzy here in Asia, too, about, trying to get those orders in ahead of that day. So certainly there's a lot to look forward to here today. But today we're really kind of rallying on relief when it comes to Iran. We're up about 1.3%, the CSI 300. Hynix is really kind of on fire here. We're close to 3% at the early get-go of this open. And you're seeing some of these sort of AI winners are once again back in the fray here. When you take a look at Capricorn Tech, the domestic chips are doing well. CATL is in the green. So that continues to be a good news story here today. Shanghai crude is lower by 4%, right? So you are seeing when it comes to the oil price substantially move lower here today. Hong Kong is looking like this. Of course, we're going to focus a little bit more on the tech sector, given the moves that we saw when it comes to Baba throughout the day yesterday here. And really, it got really bad towards the afternoon session after we started getting more lines from the CCTV warning about misleading promotional practices and the like. And it doesn't just pertain to, of course, the e-commerce space, but they're talking about travel stocks as well. So we'll focus on that. But it looks like, there you go, things are reversing right now. And Alibaba, Baidu, Xiaomi, Tencent, all in the green here this morning. We're up about 1% or more on the HS Tech here. MSCI China, though, we're still on bear market watch. If things continue the way that they are now, maybe we'll avoid it for another day. But certainly we're watching very closely how offshore is looking at here today. Meituan, there you go. That's the exception here. It's sticking out like a sore thumb. We're lower by close to 2%. Perhaps because we just got that news of Alibaba joining in on this bid for Pupu, which is that online grocer.
Aggressive bid too.
Yes. So does that actually change the fate of really Meituan's chances of that merger or that deal? So certainly Meituan is feeling it here this morning. We're watching, of course, the oil, the airline names, and really given the drop in oil prices, that should be beneficial, of course, for some of these airlines across Hong Kong and China. There you go. You see China Eastern leading that charge. We're up close to 4.5%. We're watching precious metals as well, given what we've been seeing with gold prices and the like. And these metal miners are certainly recovering here today, despite, gold is steadying now. I mean, we're coming off some of the initial sort of bounce, but we're back above that 41, 4,200, close to that level here. Take a look when it comes to chip stocks. So certainly we talked about Capricorn. We'll see how some of these 8 shares are doing here. And there you go. You are seeing less SMSCs. Hua Hong Semi is close to 9% gains here right now after we did see the Philly Stocks Index surged nearly 8% overnight. So there is plenty of optimism regarding Iran. We'll see how the sort of SpaceX IPO, what does it tell us about this AI trade? Does it give it a bit more legs? At least today, the indication is yes. And we have earnings to tell you about when it came to Chow Tai Fook as well. So it was a earnings beat. So they've been talking about that. There you go. 12% gains for the jeweler.
Very good. Golden day there for Chow Tai Fook to the upside post earnings there. Just to recap the big news, of course, in case you missed that, we just discussed that with Min a few minutes back, but just in case you're joining us right now. So about 5 p.m. local time yesterday, the statement came out from really a multi-regulator, department, the market regulator, the cyberspace admin, the national railway admin, and as you can see, of course, train tickets are very much in focus as well here, effectively summoning 7 major internet platforms to discuss some improper practices, false advertising, improper ticket sales, everything that has to do with competition. Anti-involution, of course, is sort of big picture conversation here. Now, our next guest talks about this regulatory environment and that the ceasefire, as far as regulation is concerned, the report says that ceasefire is actually over, as Beijing is naming and shaming more companies in public releases. Joining us from Beijing this morning is Tilly Zhang, China Tech and Industrial Policy Analyst at Gavekal Dragonomics. Tilly, good morning. So the title is very self-explanatory. Regulatory ceasefire is over. It reminds a lot of people about the regulatory storm, I think it was 5 years ago. So my question is, should it remind us of that, or is this time different?
I think this time is pretty much different because if you think of 5 years ago, the targets are pretty specific. They want to target on the internet platform companies. But if you look at the targets fall under scrutiny this time, it's actually quite broad because even if the high profile internet platform companies are getting most attention, but if you check the specific targets, there are also on other state-owned enterprises and also even some local governments fall under scrutiny because they did something wrong or against the central political campaigns such as anti-involution or the unified national market. So I think it's quite different than last time, although it's both a government-driven campaign against the communists. But this time it's more about the strengthening of law enforcement instead of a target-specific crackdown.
Right. And You mentioned at the time, there was, the ceasefire, right? Where at a time when the economy wasn't doing as well, maybe they weren't not going to put that much emphasis on the enforcement side of things. But now that they're more publicly naming and shaming these companies, tell us about the timing and why they're doing this now.
Well, this timing is quite interesting because after the internet crackdown, it apparently ruined much of the market confidence. And because the economy was down, so there was a ceasefire period of the regulators decide that, okay, we are not going too hard on this calmness or like enforcing the rules we want to set. But now, like one reason is because this year, China's economy has been slightly better and the market confidence has been generally restored. And another side is that they have a lot of new rules wants to be taken seriously. They have this like anti-involution campaign there for several months, but never really like getting fully implemented. And they have like other new rules that they want to kind of fixing the market environment infrastructure. So from their perspective, it means like more of an orderly development of the market. So like in order to set those new rules, they have more written documents. And they also want these written documents to be taken seriously. So the ceasefire period kind of over because now is a time to implement the new rules and like advertise about them. So make them to be taken more like seriously.
And I think you're right. When we talk about the semantics matter, they matter a lot because people will take what they interpret things based on what we call it. Should we call this a crackdown, or is this simply just enforcing the rules that already exist?
Well, I probably won't call it a crackdown because, like, if you check their behaviors and the punishment they received, they are quite well measured. They are not really exaggerating the punishment on companies, but instead, like, they are considering, like, to make this less look like a target-specific crackdown campaign, but more of, like, to install the overall market rule. I think that's the purpose. But of course, from the market perspective, it might, like, interpret things differently and ruin the market confidence because of the activities. But from the regulator perspective, they are kind of careful about this because you can see a lot of them are warnings, are not really giving penalties. So I think this is like still going on, and they have to consider both of the market confidence and the things they want to do.
And Tilly, it's great to get you to decipher the language around some of these statements, right? And I think the one thing it brings back to is maybe during 2022 is when they talked about how the regulatory policy should remain consistent with macro policy. Can you explain a little bit more the meaning of consistency, and does that sort of meaning change now, or is it basically the same?
Well, the consistent of policy is a political language. It basically means like to make policies, like adjust your policy based on market reality. In the past, it probably means like when the economy is down, don't make your policy too harsh on companies to ruin the market confidence or what. But like now, when the market confidence getting restored and the economy gets slightly better, you probably want to like build more like build more future policies to improve the future market environment. So like I think from the regulator's perspective, make a consistent policies is like it's being adjusted over time. So make appropriate policies consistent with your economic environment.
Tilly, you mentioned something earlier that, and I hope you could talk a little bit more about that, because I think the messaging that foreign investors will take from that could be important and material. You mentioned that state-owned companies are also the subject of scrutiny that's happening right now. If you could elaborate more on that.
Well, there are some examples such as, the anti-monopoly campaign is sort of a big thing. Like they want to take down the monopoly behaviors. So like some state-owned companies such as China Telecom has been advertised on the State Administration of Market Regulation website as well as an example of violating the anti-monopoly rules. So it's not only targeting on private firms, but also state-owned enterprise can also fall under scrutiny.
Tilly, what does this mean for these companies? Now, I'm just wondering, we saw the sort of a negative reaction to all this news leading up to it. Do these, the scolding, even without punishment, do you think that that helps or at least changes the operations of these companies? Do you think, how effective do you think it really is in terms of ending some of these, price wars and the competition in these industries now?
Well, it's actually quite hard because if you think of the anti-involution campaign starts from last year, it's like the government has been using less of the hard rules, but instead more of the softer rules, such as like summon them into a meeting and talk them out of the price war. But it has worked on some specific sectors, on polysilicon, they had more specific rules. But on like some other sectors, like food delivery, you can see companies are still engaging in price war and over competing with each other because they are market share competition considerations. So like from the regulator perspective, the anti-involution campaign and the end of this price war is more of the sector to sector tailored merit. So because like unlike previously on the overcapacity on state-owned sectors, now these overcapacity issues are happening in more private sectors and also on more like the emerging technology sector, such as EV and solar panel. So they don't want to get in too hard on this companies, but more of like finding out what are the proper merits through like tailored solutions for each industry specifically.
Do you think it's these things, I know it's a very broad question, but do you think the direction of travel is encouraging, that these will work, and if it doesn't work, do you think the hammer comes out?
It's very hard to say. It really depends on like how this company's response and whether the government sees a necessity of enforce harder rules on them.
All right. Tilly, it's great to have you. Thanks for chiming in.
Clarity.
Tilly Zhang there, China Technology and Industrial Policy Analyst at Gavekal Dragonomics. A look at how Asian markets are doing as we enter that commercial break here. We're taking a look at continued gains here when it comes to risk assets. Hang Seng, HS Tech are up about 1%. We've come off a little bit on HS Tech here this morning, but yes, looking pretty good in Greater China here this morning as we wrap up what has been a pretty busy trading week. This is Bloomberg.
Welcome back. It's a good day when the underperformer is up 1.5%. Korea, as usual, at 7%. The usual names are catching very strong bids going into the weekend here. Asia Pacific, 3% to the upside. The chips rally, just to be more specific in case you didn't get to what I was alluding to there, certainly benefiting certain industries and companies. SK Hynix, you have MediaTek in Taiwan. Hynix, for example, is seeing surging demand for leveraged ETFs with associated hedging flows, of course, now dominating trading in that specific stock here.
Yeah, let's bring in our managing editor for Asian equities, Lanting, too. She joins us now. The SK Hynix story almost sounds like the tail wagging the dog a bit, Lanting. I mean, tell us more about, are these leveraged ETFs now becoming as important as the fundamentals of this company?
Yeah, it is striking that 60 to 70% of trading activity in SK Hynix is now being driven by leveraged ETF-related flows and hedging activity. Think about what that means. Traditionally, most trading in a stock would reflect investor views on the company, its earnings, its valuations, etc. But if 2/3 of the volume is actually coming from products built on top of the stock, and increasingly the trading is being driven by mechanics of the market itself. And that's why we're seeing phenomena like options open interest on SK Hynix exploding 17-fold in just a month, and the daily price swings of 10% or more. The ETF ecosystem is creating its own demand for options and hedging, which then feeds back into the underlying stock. Now, it doesn't mean the fundamentals don't matter, but it does mean that on any given day, the stock may move less because of what happened to the AI memory cycle, but more to how leveraged products need to rebalance their positions.
Now, how much should we lose sleep over, the fact that you have leverage ETFs, you mentioned that, you have retail participation, which is obviously part of that story. Both things are potentially creating systemic risks in Korea's very concentrated stock market.
That's really the key question, I think, for a lot of investors. If you look at the VCOSB, that reading is at around 90, which is an extreme level of expected volatility. What is remarkable is that it isn't happening during a global financial crisis or a major market dislocation, right? If you translate that into U.S. context, you're talking about the volatility levels that would normally be associated with significant market stress. Yet the S&P 500 volatility right now is hovering around 20s. So in Korea, this reflects an interaction between leveraged products, options activity, and margin financing among retail investors. When volatility rises sharply, brokers may tighten margin requirements to manage their own risks. If that happens, investors who are highly levered may have to be forced to reduce positions at the same time, and that can create a self-reinforcing cycle of selling pressure, higher volatility, and then additional deleveraging. In that environment, I think crowded AI winners can become extremely volatile than what their underlying fundamentals would suggest, and that is a sign of an unhealthy market.
All right, Anting, thank you. Our managing editor for Asia Equities now. Okay, so one big stock to another. Let's talk a little bit more about MediaTek right now, Dave. When you take a look at this is, of course, the chip maker in Taipei, or in Taiwan, I should say. We're set to hit their best quarter on record as investors are betting on this shift into AI. Can't help it move past the overhang of a struggling older tech business.
I wonder why it's TEK and not TECH. Anyway, let's bring in Jeannie Yu, our Asia Stocks reporter. There's probably a very good answer for that question. I'm just fairly ignorant at this point, this Friday in the day. Jeannie, yes, tell us about this. What's the story? Not the spelling, but yes, go.
Yeah, it's a record quarter. Last year, when we were tracking the TAIEX, we were actually wondering why MediaTek underperformed so much.
Right.
And then up until first quarter, investors still view this mostly as a smartphone chip maker, which is suffering from all the headwinds, memory prices and also the weak consumer demand. Suddenly in Q2, there is a narrative change. So right now, I think we're in the middle of a re-rating of the stock. We've seen 130 billion added, 170% of gains this quarter. But I think this is, if this is a re-rating story, I don't think the gains will stop here. So there is more upside potential, especially considering there were two major trends right now. One is, I think the US hyperscalers, they tend to use more of their own tailor-made chips rather than one size fits all, that kind of GPUs, very expensive ones from NVIDIA. They're trying to adopt more tailor-made stuff. For example, Google is the biggest user of those chips. So MediaTek is one of the two key suppliers for Google. So it now has 10 to 15% of market share, but market is expecting MediaTek is going to grab the orders from its major competitor Broadcom, and then expand the orders from Google, especially in its next generation AI build out. I think this is one thing that's interesting. The second thing is they are actually half of their revenue is still from the smartphone, from the handset segment, but gradually people are expecting there is a very significant revenue shift. So in 2 years from now, I think their revenue, more than half of their revenue will be coming from the ASIC market, the AI chip market. Yeah. So I think if this transition is successful, this would make MediaTek totally has a transformation, redefining itself from a handset, related stock towards a totally completely AI company.
Yeah. So it's a nearly 200% gains this year. What's the sell side saying right now? Do they still see an upward trajectory for the stock?
Yeah, I think many people are revising up the earnings forecast. So right now, the valuation is expensive if you look at forward 12 EPS. But if you expand the valuation multiple, for example, price versus the forward 24 months earnings multiple, if you counting in the next year's earnings potential, it's actually not that cheap. Not that expensive. So I think this is more a fundamental story rather than a momentum or liquidity chasing story.
Jeannie, fantastic. Thank you so much. Our Asia Stocks reporter, Jeannie Yu. In fact, just on that very theme here, we'll just leave it. We'll look at this rebound that we're seeing across some of the other re-rated names like Lenovo. We're up 3% on that. Similar story. Markets had a substantial paradigm shift around what these companies are and what they're buying here. Lots more ahead. This is Bloomberg. Right, let's have a look at some of the gold mining stocks, really as a proxy for risk appetite. Gold obviously is seeing a bounce today, back above 41. Obviously from the cutoff, it's slightly down, but we were closer to 4,000, in fact, this time yesterday. Flip the page, energy, which is obviously the opposite side of the same coin, given, of course, where you are in Brent prices, and it does help, of course, risk appetite when you have a slightly softer dollar and a softer oil price. Sub 90. So cheaper oil, does that mean cheaper jet fuel? Of course, it takes some time for that transmission effect to filter through into sort of the physical stuff. Airlines are catching quite a decent bid today. Of course, wasn't quite the case, of course, this time. Yesterday, just very quickly here, just a look at some of futures here going into the U.S. session, where, of course, the big one, quite literally, is SpaceX and the listing coming through. And by the way, in case you missed it too, we had some changes to the NASDAQ and some components there, so we'll talk about that later, and some new names coming through being injected into the index. And of course, in case you missed, the other big story was the ECB hiking rates for the first time in about 3 years and flagging another one as soon as next month. But yeah, let's coming up here, we're talking about the impact of this jumbo SpaceX IPO and upcoming listings and other massive AI names. Slots more ahead with BNP. This is Bloomberg.
Welcome back to the China Show. We are just, half hour into the session here. And yeah, all looks pretty good here right now on this happy Friday. It looks like if you're long these markets and hoping for some sort of good news, right? So the Iran front, according to President Trump, the war is over. We're still waiting for, of course, confirmation from the Iran side of things. But we did hear in the last couple of moments from Fox News reporting the U.S. has intercepted what has been one-way sort of attacks from Iran. So certainly watching very closely that story here and how it unfolds as we enter into that weekend. But President Trump says looks like they might be signing that agreement there as early as the weekend. HS Tech is doing this. We're seeing a bit of recovery here in some of these big, large cap tech names as well after the concerns around some of the regulatory warnings that we got from CCTV yesterday morning, around 24 hours from yesterday. So certainly it seems like things have been a bit more of a relief here given the Iran situation, of course, and as we count down to that SpaceX IPO date.
Yeah, things are actually aligning quite nicely going into this weekend. And as you can see, of course, including, of course, some of the earnings coming through, and gold is actually on the way up. So putting everything together, some of the big movers, while you look at the rest of the region, I should mention Chow Tai Fook is up 15%. That's an earnings story. That's a gold story. Gold miners are actually up as a proxy for risk appetite. And, of course, you have the OG winners that have been consistently and strongly bought past tense and being bought present tense on these dips. And you look at the likes of Korea, which is up 8%. Nikkei's up about 4%. Interesting observation, of course, in case you're just joining us right now, just to mention what Lienting too, of course, from our markets team mentioned, is the fact that you have an index like the Kospi that's up, let's call it 90% year to date, but implied vol on the index is also shooting higher. What does that tell you about what's going on in terms of market dynamics and piping and mechanics there? Indonesian markets are coming online. Of course, this one is the complete opposite of what Korea's done. See, from the best in the world to the world's worst by far, Indonesia. We're up at the open, though, just to note that. We have a statement out coming out of authorities there. Bank Indonesia sees capital inflows following, of course, an increase in interest rates of late. This, of course, the story here has really been about regulators trying to anchor confidence around the markets and assets, given, of course, some of the negative news that's surrounding this market specifically. And just a brief look across the macro right now, the U.S. dollar, the 10-year yield, and, of course, where you are in oil prices, both down 1%, which is really helping, as we were mentioning, helping things along here.
Yeah, and it all comes down to, of course, what SpaceX and whether we see that smooth sort of launch of this listing, right? So they've officially made history, being the biggest ever IPO and sending it to the ranks of one of the largest public companies here, even bigger than Tesla itself here, and really minting possibly Elon Musk to be the world's first trillionaire here today. So, yeah, whether it goes and lives up to the hype certainly is debatable, too.
So it's official, 135.
But the retail demand is certainly real from what we've been seeing across the world.
Yeah, so I'm really curious to see how it trades.
Yeah.
Right. So I think the topic we had yesterday was, a similar listing was when Facebook Meta hit the markets and some of the technical glitches. Now, I think for now, there's nothing that suggests that's going to be the case, but something this big, of course, is untested. So I'm waiting to see what that's going to happen there. And of course, what just day one's going to be like, right? Will the people that didn't get an allocation get in the secondary market, people that weren't allowed to get into the IPO itself? Will they make a punt in the secondary market? And
the Musk fandom, right? The retail portion of this is certainly one thing to watch, given that the trading community there, I think they took about more than $100 billion, they made about $100 billion in orders from retail investors alone. And they were only reserving, 20% of this allocation to the retail sector. So whether, this sort of how sticky those Elon Musk fans are, right? Because a lot of them are saying, look, I don't look at the fundamentals here. This is a company that doesn't make money here right now. This how to justify that $1.7 trillion valuation. They push that aside because it's a lot about the hope and the Midas touch of Elon Musk.
Well, that's key man risk for you right there, too, if you look at it on the other side of the same coin. Return on vision. Right. Let's talk about this. Investors across the Asia-Pacific have parts of the market here have been largely shut out, of course, of that IPO. Doesn't mean, of course, they can't get in once it's all fair game, of course, in the public markets. Abhishek Vishnoy is here with us, our senior Asia equities reporter. I guess, for one, where is your head at, Abby, when you look at this upcoming listing? What's your sense of what the first day is going to be like? And how does it affecting market dynamics this part of the world?
Well, if you talk about the debut, our reporting is reflecting that the alternate platforms where you have some financial derivative instruments or bets on what the day one would look like are implying about 35-36% gain. And that's a big bump. So that means that the market cap that IPO implied, which was $1.77 trillion, that increases to more than $2.4 trillion. So it seems like it's setting up for a good day for SpaceX. The Iran war news, how tech stocks are reacting, are actually providing a good backdrop for the listing. Having said that, valuations were at 95x. There is definitely excitement among investors, but it is to be seen whether those kind of gains can actually be made and whether SpaceX can maintain those kind of gains. Now, one thing that can happen is, obviously the IPO was subscribed about 4 times, so there is definitely demand for a higher number of shares. We have scores of stories out there what retail investors and even institutional investors are doing in terms of getting a pie of SpaceX or getting something like SpaceX. So everything related to SpaceX peers, suppliers, ETFs that are holding it, or index funds that will get SpaceX as a part of their indexes. Those kind of funds they're all excited. In fact, the ARK's Defense and Space ETF is set for its second consecutive, quarterly inflow of about $200 million or something, and that is largely in this year, and that speaks to the kind of demand that's out there for space-related stocks. So this space gets re-rated, but on the flip side, David, if you look, this space is not really directly tying into the current AI-related or chip-related names. They would be supplying, but not directly, and none of these space-related names, among the big ones, are actually a hefty part of the index. So there would be some rotation from Mac 7, from chip names, as SpaceX starts commanding higher heft in a variety of indexes.
You mentioned about all the different ways that investors are trying to at least capture this sort of SpaceX effects without actually getting access to the actual stock itself, whether it's the space supply chain, the ETF funds and whatnot. Can those sort of routes generate the same sort of returns as investing in SpaceX itself?
Yeah, our reporting is reflecting that, and it should be like that. You have seen this happening time and again on a mega trend. Like take for example AI. There would be stocks which will get re-rated first in the US, and then you have Korea-like rally, a Taiwan-like rally. So something similar is happening related to SpaceX as well. Suppliers and peers in China. We have a bunch of names out there like Sunway Communications mentioned in an analyst call that they do supply parts to SpaceX, and that stock has rocketed over the last 1 year. Similarly, in Taiwan, there are a bunch of these names which, according to a gamut of media reports, are supplying parts and parcels to SpaceX, and they have also rocketed. I think a lot of stocks have more than doubled. Now, apart from this, look at markets like India, look at markets like Indonesia, and even other parts of Asia where there are some defense suppliers which are allied to space activities, and they're getting decent amount of money coming in. So as these space-related, Starlink-related things get re-rated, I think it will feed into peers, suppliers, and the whole gamut of ETFs that would be carrying these stocks.
Thank you. Abhishek Vishnoi there, our Bloomberg Senior Asia Equities reporter joining us out of Singapore. Let's talk a little bit more about, of course, what this means for Asian equities and bring in Zhikai Chen, head of Asian and Global EM Equities at BNP Paribas Asset Management. Zhikai, it's great to have you.
Great to be back.
How much interest are you getting now from clients about either SpaceX or even just the supply chain and what the feed-through means for Asia?
Probably not as much on SpaceX because it's largely outside of a benchmark and we invest in emerging markets in Asia. But certainly over the last 2.5 years now, there's been a lot of excitement about AI investing. And Asia is very fortunate to be in that exact crux of supply chain, if you will. I think 75% plus of the world AI chips comes from this part of the world. And if you look at the components in terms of the GPUs or the HBM memory is probably even higher, 85 or 90%. So as a result of that, I think the Asia manufacturing powerhouse that we've all known has really benefited by being the providers of pick and shovels to the AI capex. So that has definitely been a constant theme for about 2 years now.
Yeah, and we'll talk more certainly about the opportunities with the Asia supply chain. I mean, look at the likes of Korea, but I want to get your thoughts on just the notion that these large listics, not just SpaceX, you have the other big U.S. names, not just in equity markets, in debt markets too, will cause some liquidity to get drained out of Asia Pacific and EMs. Like, how are people going to be funding this effectively?
I think there's some concerns on that, but I think that's probably overdone to a certain extent. Okay. Yes, 75 billion IPO is the world's largest. I think there's a lot of superlatives associated with this IPO, but it's also happening in the world's deepest, most liquid capital markets, right? And as you can see from the details that we've seen overnight, I think institutional is about 4x oversubscribed. Retail is 100 billion, as you guys have mentioned, and only about 20% of that is available for retail. Yeah. So there's definitely a lot of capital behind this. And if you look at from the U.S. capital market point of view, the amount of cash that's still sitting in money markets funds, in brokerage account, it's even higher than what we saw during the COVID times, right? So there's definitely a lot of firepower, if you will, that's there to basically purchase this. And then coming back to what it means for Asia, I think it's not really fair to compare the two in terms of constraints or liquidity, because the typical Asian investor, the typical emerging markets investors are probably not thinking about SpaceX as a direct competitor to the allocation to emerging markets, right? It's probably a different animal completely. And quite frankly, for the US investors, it's probably a new allocation as well, because there's not really a lot of direct companies that's involved in space exploration as well as AI. There's no comparables, to be quite honest.
Yeah, and I think it's interesting given just all these mega IPOs. There's a narrative out there that maybe this suggests we're at a peak in this whole AI trade. Do you see it? It doesn't seem like you see it that way, Zhikai, but I'm just wondering, how do you still stay invested in this, given the fact that there's been a lot of rotation? Is every sort of pullback a dip buying opportunity for you?
From the market so far year to date, that seems to be the case in Asia. I think we are still very focused on our fundamentals. When we look at a lot of these companies in the Asia supply chain, they're supplying this AI capex, right? So we are kind of bystanders in the 3 large IPOs that's coming in the US, but at the same time, we monitor them quite carefully because they give us an indication as to the global risk appetite or the global investors' appetite to continue to fund these companies, right? And quite frankly, these 3 mega IPOs that's coming is basically giving us a sense of like, okay, now we are moving from concept into reality in terms of I'm going to assign a multiple. I'm going to assign a valuation to these companies that's most directly involved in the monetization of AI. So that's going to give us an indication in terms of how much more capex is coming down the pipe. And if you look at where we are so far year to date, at least for the hardware supply chain in Asia, the earnings are really following through, right? Yeah. It would be one thing if that, we have this massive rally in the share price, but the multiple keep expanding. But in fact, if you look at some of the key players in the AI supply chain, the multiples have been steady. In fact, some of them have gone down because the earnings revision has been so strong, right? For the three companies to talk about in Asia that is most key related to AI capex, they're amongst the top 10 operating profits generators in the world. Two of them are going to be in top 5. One of them is number 2. So I think the earnings that's still coming through is really also anchoring some of this multiple re-rating that we are seeing in the Asia supply chain so far. So we're quite comfortable at this point.
So I guess we need to talk about Korea, naming the unnamed. The market's up, let's call it 100%. And it's a market, it's the best performing market, it's also the world's cheapest market when you look at it on a multiple basis, right? What should I own in Korea? And can it go up another 100% is the sell-out media question?
Got it. You're putting me on a spot there. I think we are invested. We are still marginally overweight Korea. Obviously, we've really benefited over the course of the last 2 years, as I mentioned, from being invested in the key names in the Korean stock exchange market. I think it's been quite narrow as well, right? Because if you look at the composition of KOSPI or the MSCI Korea, I mean, the two largest names there is 45-50% of the benchmark. And that's also led to a very sharp outperformance of the large cap names versus small caps. To your point, KOSPI is up about 90% year to date. So it's actually outperformed KOSDAQ by almost 85%. That's usually very unusual to see in a market, right? So we are still invested. Yeah. We are still following the earnings very closely. At this point in time, we still think there's more potential for the share price to anchor itself based on the earnings revisions that we're seeing.
How do I look at China then when we're close to bear market for offshore? I mean, there are AI pure plays, but it seems like the earnings visibility is not as clear as a Korea or Taiwan. Yeah.
So I think there's a couple of IPOs that's coming that probably might change that, we think. We are also following that. Some of them. These are the memory plays that's coming to be listed in domestic market shortly. I think there's good news on that front as well. There's some report basically indicating that some of these players are still pricing the DDR5 memory at the same price as the market world leaders. There were some concerns that initially that once they basically do this IPO, once they have this capex going, the increase in terms of capacity may basically lead them to basically competing on price and pushing down some of this pricing that we are seeing that's been so strong in the commodity DRAM market due to the requirements of HBM memory as well as expansion of capex, AI usage, right? So there's some good news on that front. I think a lot of people are excited about it. Depending on the multiples that you're using, it suggests that it's going to maybe come to market at about 10x, and that's not that expensive in the context of the earnings revisions that we're seeing. So maybe that's the, shall we say, the turning point that we need in terms of the Chinese market for some of this AI-focused investment.
Yeah, I think that was number 4 in terms of memory, right? Player in the world, without naming names again. Indonesia.
Tough one. I think Indonesia this year has quite a few impact on the overall macro and as well as the regulations environment. I think what really kicked it off was a very firm response from MSCI, particularly on some of these corporates that was solely focused on index inclusion and concerns about liquidity, right? So I think the very firm response also led to a very sharp reaction from the regulators and the Stock Exchange of Indonesia to basically address some of these liquidity concerns as well as concentration of ownership, particularly free float. I think that was the first leg down in terms of some of these names. Then you have question marks about the fiscal sustainability. I think the president has obviously big ambitions in terms of Indonesia, in terms of economic growth, and he has basically a lot of plans in terms of lining up the fiscal spendings behind it to support that. But that has also led to concerns whether how sustainable this is on the fiscal side. And the latest data on the current account was also a little bit of a worry for people. because we have actually saw a shrinkage in the current account surplus to almost a balance now.
Right.
So that's why the FX has been weak.
Zhikai, I'm going to leave it there, but thank you.
No
Zhikai
problem.
Chen there, head of Asian and Global EM Equities at BNP Paribas Asset Management. We have much more ahead. This is Bloomberg. All right, looking at oil prices here, you are seeing a bit of a cooling when it comes to crude this morning, with President Trump saying the war with Iran has ended. Trump told a virtual campaign rally that the U.S. got everything it wanted in a deal that could be formalized within days.
Yeah, but there's no confirmation from the other side of any deal. And as our reporters try and illustrate this very complex flow chart of how...
That's not even all of it. You have to keep scrolling
What's
down.
the most complicated way to conduct a complex negotiation on your Bloomberg terminal? Why don't we bring in John Herskovits here, our East Asia government editor, with more on the story and where exactly we are. We know what the president said. He said, a deal with Iran is near. How close exactly are we, John, at this point?
Yeah, we've been down this road before. Trump has threatened massive strikes, then reversed course, said that a deal is near, that the U.S. has gotten everything that it wants. And then we've gotten the caveats to cold water from Iran, saying that these sorts of comments are speculative. Now, there's some positive things. We see intermediaries such as Pakistan, Qatar, some of the Middle East states being involved, indicating some sort of progress. But actually getting something signed has been elusive. We've seen this many times. It hasn't happened. So this memorandum of understanding has been floated, but it's never been agreed to. So that's where we are. And we'll see how Iran responds to the latest. They'll be up and running for business in just a few hours.
Okay. Well, tell us still where the sticking points are, and really when it comes to the points in this latest proposal.
Yeah, we don't have much in terms of details of what the latest proposal is, but the main things are a complete opening of the Strait of Hormuz, an end of the Iranian nuclear weapons program, and in return, Iran is looking for unfreezing of its assets, and also, Iran is trying to get some security assurances as well, looking for an end of the conflict between Israel and in Lebanon. So these things have been going on for some time. Whether we actually get a deal is, the U.S. is looking at a short term, Iran is looking at long term. The sticking points remain the same, and we really haven't seen a huge amount of movement indicating that any of these have been resolved.
John, thank you. John Herskovits there, our East Asia government editor in Tokyo for us. Just a brief look at markets while we take a short break. This is Bloomberg. Right, welcome back. As you can see, a rally across some of the more familiar names. TSMC's up 2, and some of the other chip names across the region are catching on. Of course, this broad risk rally we're seeing going into the thick of Friday. Similar picture when you look at some of the big names across the Chinese platform. Some of the OG tech names, not as much, which has also been a feature comparatively to some of the more favored AI names across the region. But China is, of course, also has its share of some of your AI plays coming up on your screens, apart from, I guess, Chow Tai Fook, which is a gold play in an earnings story. Some of the semiconductor names, as you can see on MSCI China. Your top 4 today, in terms of percentage movers, are also seeing some very, very punchy gains here today.
Yeah, it looks to be a pretty good day and a bit of a catch-up rally when it comes to, of course, what we've been seeing in China tech, though Meituan has been kind of the exception here this morning. In some other world news that we're tracking today, UK Defense Secretary John Healey has quit over Prime Minister Keir Starmer's failure to increase defense spending. Healey posted his resignation letter saying that Starmer's inability to deliver the requested funding risked leaving Britain less safe and in breach of its NATO commitments. The move damages Prime Minister Keir Starmer's authority, just as rivals are lining up to challenge for his job. Adobe says its chief financial officer, Dan Durn, is departing. Leaving the company is without a top tier of leadership after CEO Shantanu Narayan announced in March that he would step aside. Chipmaker Marvell says Durn will be joining its staff, and the announcement overshadowed Adobe's quarterly results and an outlook for the current period that surpassed analysts' expectations. And the eldest daughter of Thailand's king has died. 47-year-old Princess Badra Kitayaba has been in hospital since 2022 when she collapsed due to a heart condition. An official statement says she died from an abdominal infection and other complications. She had been seen by some analysts as a potential heir to the throne, with the king not yet having named a successor. .29 a.m. in Tokyo. Japanese markets are going to at lunch break in just a moment. And yeah, it's a good Friday. If you're looking at, of course, risk assets here today, we're 3.5% higher on the Nikkei 225. As Dave mentioned, there's a lot of those sort of OGs that are continue to outperform here today. The Topics is also up more than 1.5%. And yeah, we're just days away from that BOJ meeting as well. So next week is going to be pretty busy for Japan.
Yeah, and I think the Fed is also, of course, coming through as well. So it's going to be a busy week before, of course, we go into the weekend where it's a lot of weekend to the sports stuff.
NBA Finals. World Cup kicks off.
Korea's playing right now, which I think is still 0-0, about 26 minutes into that match. About an hour into, of course, the cash market session in mainland China here in Hong Kong, and the Asia-Pacific benchmark is up 3%. Thanks to the 3.5% on the Nikkei and thanks to the 6-7% on the Kospi. Every single sector almost is up. Properties down. The Bloomberg Asia Dollar Index, which is, I guess, indicative of risk appetite this part of the world, which is bottom row, second to the right, which is also interesting because you have the dollar index actually also bid today, so which is obviously more a G10 look there. Now, within this space, we're looking at some of these e-commerce firms. The big news, of course, 5 p.m. local time, with the platform companies being summoned in. 7 major ones. You have regulators effectively asking them to come in to talk us through these the scolding for excessive competition. Automakers, travel platforms were also flagged over some of these sales practices. And, this is something we actually talked about with our guest earlier on, about an hour back, Yvonne.
Yeah, Tilly Zhang from Gavekal basically said that, it brings us back to those sort of memories that we saw back in 2021 when this whole sort of regulatory crackdown began. What they say, though, if you track what has been going on the last 5 or 6 years, is that the number of enforcement and in terms of what they do to companies has not actually changed, but it's the way that they've communicated, right? That there was this bit of a ceasefire here for a few years when the economy was weaker. Now, though, there's more of this sort of naming and shaming that we're seeing on this sort of on some of these private companies. So certainly that's one thing to watch out for. Here's what she had to say.
I probably won't call it a crackdown because, if you check their behaviors and the punishment they received, they are quite well measured. They are not really exaggerating the punishment on companies, but instead, they are considering, to make this less look like a target-specific crackdown campaign, but more of to install the overall market rule.
Let's bring in Bloomberg Intelligence's Catherine Lim. She's on set with us to walk us through, because you say there might actually be an earnings impact to this latest sort of scolding from Beijing. But how do we interpret the statement that came out yesterday?
I love it when this comes the last weekend of the 618, shopping campaign out there. Well, hopefully people are still going to buy, with their heart at ease that there's no excessive, promotions out there that is somewhat, overshadowing some of the real perks. But I guess really we've seen since late last year that the authorities are stepping in, trying to summon more of these platforms in to discuss all kinds of things, closed door. But we know that, they have their eyes on these platforms and the magnitude of the promotions, how they go about doing it. What are you exactly putting on your platform to try and get people to buy? So again, not a surprise, particularly given that, again, the last weekend of 618, promotions, everyone's going to have all in into, getting the buzz. So I do think that what's going to happen is that the 618 shopping campaign, it's not going to be an exciting one.
since the beginning of this year, we've actually seen online sales slowing down. So, that is what it is for retail sales in general, especially when sentiment isn't all that great.
So does the slow momentum continue then through this 6/18 going into other big, of course, shopping dates to look forward to end of the year?
China will be reporting their retail sales next Tuesday, 16th of June itself, and I see consensus expecting a negative 0.3% growth, essentially a decline of 0.3% for the May retail sales. So that goes to show that sentiment isn't all that great. There will be selective pockets of little growth here and there, but again, I think with the campaigns, the promotions dying down, the 2-month-long shopping campaign isn't really going to impact retail sales at this point in time.
How is it impact the earnings of some of these companies moving forward? You talked about there could be a bit of a sales slowdown.
Yeah, we've actually seen Alibaba coming through with the numbers itself. They're talking about better economics out there, but let's not forget that a lot of the spending that they are putting into pushing agentic through their apps itself is all going into the others. So there is a cost in actually training their apps and all that models out there. So it is still going to take them investments to actually try to get users comfortable with agentic.
Sorry to put you on the spot here, but the big mover today is Chow Tai Fook, out with earnings. Do you have any thoughts on that?
Yeah, I was at their press briefing yesterday.
Oh, look how that worked out. Okay,
I know. I mean, it's really interesting, seeing how they are talking about the strong momentum for their jewelry sales in April and May, where we've actually seen, that gold correction out there. And we'd actually also see mainland same-store sales volumes narrowing to a decline of 6% versus a 31% volumes decline in the first 3 months of 2026. So it's interesting that, all in, we are seeing some buying interest coming back from consumers, which is what I said. The sentiment isn't great, but there are pockets whereby you are starting to actually see consumers willing to actually dig into their wallets and spend.
Buy on the dip. Gold.
Yeah. Quite literally.
Yeah. All right. Thank you, Catherine Lim there, our Bloomberg Intelligence Senior Consumer and Technology Analyst. That's time for what's been trending on China. And really look what's making headlines in national newspapers and sparking conversations on social media. The Workers' Daily, this is, of course, the official mouthpiece of China's umbrella trade union organization, is calling on regulators to protect labor rights amid China's rapid adoption of AI.
Yeah, for more context really on the coverage, Min Lo, our China correspondent here, just helping us understand, certainly the context is job and employment stability. So what are you seeing here?
Yeah, this is definitely a big concern now, right? It's already showing up in the macro data. Actually, since COVID, we have very elevated youth unemployment rates, and it actually hasn't come down. It's still hovering around 16%, and the overall unemployment rate is still hovering above 5%. And this is really being accelerated by AI adoption, right? Because it's going to touch every corner of the economy by 2030. That's part of the government plan. And the thing about China is, under the labor laws, if a company wants to lay off workers, more than 10% of its workers, it actually needs to seek government approval. So what we are seeing now is not so much of these headline-grabbing mass layoffs, but very quiet, phased sort of layoffs and quiet attrition. It could look like non-renewal of contracts. It could look like a freeze or slowdown in hiring or a reduction of wages, particularly entry-level wages. And the reason why we are paying to this article on the Workers' Daily is because it's seen largely as the mouthpiece or the voice of the working class people in China. And it's something that the Chinese government would pay attention to because economic discontent is one of the biggest drivers of social instability and protests in China.
And according to this article, what are they saying are the specific threats that AI is posing to the labor force now?
So the most obvious one, of course, is job displacement. But the less obvious one that they pointed out is quite interesting. It's more about intellectual property and copyrights infringement, because many companies now are requiring their employees to train an AI avatar that can do their job. So that requires them to put in all their personal data, their personal knowledge accumulated over the years to train an AI avatar that would basically make your own job obsolete. And then you, in that process, also hand over a lot of that intellectual property. It's a bit of a legal gray area, and this is what the article is calling for the government to start investigating. Another area is with regard to these low-wage workers, particularly the ride-hailers, the delivery workers, because of the use of algorithms and passing out these orders and adjusting some of these fluctuating unit prices. Some of these workers find that they're actually getting wages that are less than before, but it's hard to argue their case because you don't really know how these algorithms really work behind the scenes. So again, getting more transparency on that front is another major issue as well.
Min, thank you. Our China correspondent Min Lo there. It certainly continues to be an ongoing story here and trend that we're seeing across many economies here on really how AI is displacing jobs all around the world. You take a look at what's going on. We're getting some lines that are crossing on your terminal now when it comes to Indonesia. So we're hearing from Danantara here this morning on really just trying to clarify a little bit. Obviously, the market has been very concerned about this commodity export control plan. What the COO is saying here this morning is that Danantara will not sell commodity exports directly. That's the latest here right now. What else are you seeing here, Dave?
Well, it seems like it's a, and I'll use this very loosely because certainly there doesn't seem to be at least confirmed at least a direct correlation between what we're hearing, but you take a massive step back and it does seem amidst this ongoing exercise to restore and bolster confidence in the market that some of the policies and questions that investors were questioning are starting to be clarified.
Yeah.
Let's put it that way, right? In fact, we're getting more now that there will be, go ahead.
They're going to monitor export prices,
yeah.
They say, not act as a middleman. So there's a little bit more, I guess, nuance and clarity here, just given what we've been hearing for the last couple of weeks as well, right? That there wasn't much of I guess, clarity or vision about how this was going to be implemented here. Of course, when it comes to these strategic commodities, that may only be exported by now a state-owned company. So certainly there's going to be a lot of questions and whether it provides more clarity for the market.
It's still a question. And the reason I phrase it that way specifically is we've had two buy-side guests. I know it's a small sample size, but we have two buy-side guests in the last 24 hours. Robeco on fixed income yesterday. And in the last few minutes, we had BNP, of course, on the equity side of things. That I think to BNP's case, let me borrow and quote Zhikai Chen, Indonesia is still a tough one.
Yes.
There's a lot of moving parts, but they are encouraged by what's taking place in recent days in as far as announcements and statements. In the last hour, of course, coming out of Bank Indonesia with a statement where they are expecting more inflows with a rate hike and, of course, them directly on a call with investors in the last, 48 hours or so. Lots more ahead. This is Bloomberg.
All right, we're talking all things SpaceX here, and we were just talking to Abhishek about how all these Asian investors are trying to get their hands on anything SpaceX or SpaceX related, whether it's through derivatives, whether it's ETFs, whether it's through even just the entire space supply chain, right? You're seeing it, I guess, in some of these rocket stocks in China that are rising after, of course, what we got and confirmation, of course, of this record IPO.
Directly in the supply chain or adjacent to the broader theme. We're here. $75 billion IPO, official. It's the world's biggest. And demand was 4 times, of course, that amount. Let's get Ed Ludlow, of course, who's reported on what the vision really is of the company moving forward.
Ignition.
Elon Musk wants to build the infrastructure for AI in space, and he's asking investors to help pay for it. The rocket, satellite, and now AI company wants to raise around $75 billion in what will be the largest IPO in history.
SpaceX is probably our greatest, commercial space company, hands down.
It will enable the next iteration of what we want to see as the space industry continues to grow.
This isn't just a space story anymore. After folding in Musk's AI startup xAI earlier this year, Investors buying into SpaceX are also buying into the future potential of Grok AI models and Musk's vision for massive computing infrastructure. That ambition comes with a hefty price tag. New filings show SpaceX's AI business, as in XAI, lost nearly $6 billion last year and billions at the start of this year as money poured into computing power and infrastructure to compete with OpenAI and Anthropic. Still, SpaceX has major advantages. Starlink has become a powerful cash generator through its satellite internet business, while the company's launch operations continue to secure billions in government and private contracts.
What people need to realize about this company is it isn't just a little bit ahead of the entire launch industry on planet Earth. It's orders of magnitude ahead.
And now, Wall Street wants in. Goldman Sachs, Morgan Stanley and JP Morgan leading more than 20 banks working on the offering. And Musk negotiated record low fees. But the IPO also raises big questions like whether investors are comfortable betting not just on Musk's original vision of making humanity a multiplanetary species and getting to Mars, but on a future combining rockets, AI, and social media into one sprawling empire.
And so what we're buying is the next, the global economy, 2.0 and 3.0 as we look at buying into SpaceX.
If that happens, SpaceX could redefine what the modern public company looks like on Earth and in space.
Bloomberg Tech co-anchor Ed Ludlow there. And, it's interesting, too, really, what this all means, right, when it comes to space ambitions and the like. And our Bloomberg Opinion columnist, David Fickling, says Elon Musk's ambitions for SpaceX may be difficult to achieve without vast supplies of critical minerals. And those needs could tie the company's future to China.
Yep, it goes through mainland China. David joins us right now to talk us through this. And let's start with the premise. Why are critical minerals a risk here for the SpaceX story?
I mean, we've seen this plenty of times in recent years. Obviously, most obviously last year over rare earth magnets and in some of the trade war between the US and China. But I think a really important thing to understand about SpaceX and how it's different to the existing space industry is it's just, to use a classic Elon Musk phrase, orders of magnitude bigger. He's talking about launching 1 million tons worth of satellites into orbit. At present, there's about 12,000 satellites in orbit. Of which about 70% are Starlink satellites. He's talking about raising that to the order of 1 million satellites. And those satellites will also be using more power because these data center satellites consume a lot more power than the existing communications ones that Starlink uses. So all that means a lot more solar panels. And of course, who makes solar panels and who has the crucial critical minerals for solar panels? Well, that's China.
So why haven't we seen this problem for satellite companies before, David?
Yeah.
I mean, I think it's largely because of the function of scale. If you look at all the satellites that are in orbit right now, the total solar panel capacity of all those satellites in orbit is about half the size of one standard solar farm in West Texas. It's almost nothing. What we're talking about now, in the IPO prospectus, he's talking about 100 gigawatts a year. To put that in context, all the solar panels in the US come to about 210 gigawatts. So he's talking every year half of the complete combined US solar fleet, and again iterating. Now, 95% roughly of all the polysilicon used for solar panels is produced in China. Traditionally, solar panels used in space use a different chemistry, gallium arsenide. 100% of all the gallium produced in the world is produced in China. And of course, SpaceX is very much, keyed into this sort of civil-military fusion as a defense contractor and as a sort of tool for a US company to take control of a strategic space. And it can't really expect the biggest supplier of its raw materials to necessarily sort of sit down about that.
David, it's great to have you. David Fickling there, our Bloomberg Opinion columnist in Sydney. And make sure to check out his column this morning as well. A look at how Asian markets are doing. It seems like, it is a liftoff for some of these, not just space-related stocks, but really risk assets here today. We are continuing to see gains across the board in Greater China today. This is Bloomberg.
The biggest sporting show on the planet is underway. It's not the NBA Finals. It's the World Cup. South Korea is currently, as we speak, halftime, playing against Czechia, and I think it's 0-0 so far. Mexico, a few hours back, won the first of 104 matches at the FIFA World Cup, and the co-host, of course, defeated South Africa 0-0. 3 players were actually sent off, which was also quite a banger in terms of the first match at the World Cup. The expanded tournament, of course, 48 teams, and will be played across 39 days across Mexico, Canada, and the United States.
Yeah, I mean, they're talking about this to be the most lucrative in history, this World Cup, right? When they talk about revenues here for the 4-year cycle, according to Bank of America, could increase nearly 50% to $11 billion. So certainly, it's a big tournament. A lot of eyeballs going to be there all the next couple of days. And but one country that is absent, not there, is China, of course. Its first and last appearance at the tournament was back in 2002. Let's bring in Eric Zhu from Bloomberg Economics. He's been looking at the data to figure out what's going wrong. I mean, it's 1.4 billion people, and we can't really come up with a good football
It's a long-time puzzle, I think, why China cannot make it in football. Right? They only appeared once, like more than 20 years ago. So I think as a football fan, I can talk a lot about, on the pitch, off the pitch things, right, why they can't do well in football. But I think as an economist, I have to think about more deeper issues, right? So is there any cultural thing or even more socioeconomic things which prevent China from, excel in football? So I think my theory is I don't think China is short of talents. I think China already had Messi or Ronaldo, given such huge population. There must be talents there. But the key is most of the talents, they didn't go down the football track in the end. I think most of them have to go to the education, the heavy exam. They have to spend lots of time on exam, school, so they cannot play football in the end. So what's the reasons? I think the key reason is ironically, it's probably because China, the economy is so good, right? So economy rise so rapidly. There's so much opportunities outside football. So I think many parents, actually, they are very reluctant to put a risk on football career, which is very short and also highly uncertain. I think it was traditionally not very lucrative in football career. I think only except for a couple of years when Evergrande was in the football, right? So that they pay a lot to football players. So I think most of the time, most Chinese parents would always priority on education track, right? They go to college entrance exam, so Gaokao, which will give a more stable and higher paid off education career, right? The future career. So football is very uncertain, and it's not, a priority for many parents in China.
Is it just football, or is the model perhaps not applicable
I think football is the most talked about, but I think for many team sports like basketball, volleyball, they used to do well, but they're not that well now. I think one key difference is individual and team sports, right? So because China has been very successful in Olympic Games, but that's mostly on the individual events. And why? Because individual events like ping pong, diving, so it's the competition environment is very stable and predictable, right? So you can repeat the practice day after day and make it to perfect. But football is very unpredictable, and you cannot have more than 20 players training every day, right? So,
fun fact. You were on the qualifying team for Philippines.
Played
really
going into the qualifiers.
Really?
in a past life.
Past life.
You can Google that if you don't. You're watching the China Show. We'll see you all on Monday. Have a great weekend.